Welcome back to another stock market open live stream. Today we've got a little bit of data on deck, but no major catalyst like we've had the last few days. Do have Apple, Amazon will be reporting later. Honestly, I don't see Apple as much of a larger market catalyst. Amazon maybe, just because of the AWS, but you know, I went through the Facebook earnings call yesterday. I have to say it was really good. So a lot of excitement, and really this sort of redefining. Well, or maybe I shouldn't call it redefining. Maybe it would be more of defining artificial intelligence as a tool that just makes great products potentially even better. And I think that's really important. You're seeing a lot of sort of companies start saying this. You're seeing AMD say this. You're saying Facebook say this. And really what they're trying to do is they're trying to say, hey, look, don't expect this to generate all this crazy revenue anytime soon. Instead, it's going to make all the existing stuff we do better. That's sort of what you're seeing right now. Now, that's not to necessarily say you're going to have a lot of folks who are, you know, enthusiastic about that in the stock market. But it is to say that you're getting a lot of the industry saying the same thing now, which is really interesting. Both Lisa said it, Mark Zuck said it over at Facebook, and then you've got, speaking Facebook, my gosh, the spam that you get on Facebook. I always forget to go in there and make sure to turn off comments at Facebook, because it's all a Bitcoin scam. Anyway, all right, there we go. So let's get into the market. Let's see what's going on here. So we've got AMD flat. That's not good for me. I get some AMD Fridays, and they're not going anywhere. We've got, look at this with BTC here. BTC down to 64.2, and it dropped all the way to 63.5, broke below our 63.8 line. This was really surprising. You did see it run after that, but you know, fascinatingly, the peak really hit right before the Bitcoin conference. I mentioned I thought Bitcoin would go down after the Bitcoin conference. It did. I did expose myself to a Bitcoin short position. Not as big as I would have liked, but anyway, it's now back at 60, 63, 64. The question now is, how long is that going to last? So we'll see. Do you ever make a Trump review? You know, I started filming that yesterday and I didn't finish. So I'll get that finished. I'll get that finished today and out. So stay tuned for that. But yes, the Trump black journalist event. You know, that's like in the title. What black journal? Whatever. That's that was a pretty big one. But anyway, we do get unemployment claims, and then we get ISMs this morning, and then tomorrow is Jobs Day, so after Apple and Amazon earnings. So, you know, this big week kind of keeps going. Little surprised markets are a little more tenuous right now, in that they're not enthusiastic or as enthused as I was expecting them to be. But sometimes one makes mistakes. Okay, so let's go. Let's listen to Rick here for a moment.
Significantly, considering how bullish prices have pushed down yields, we're at minus 23. Our best close so far in the cycle was minus 14. So we've given up about 8 basis points with respect to the market watching rates go down. So bear market, bull market, we see that the yield curve is being pressured. Here we go. Non-farm productivity, second quarter preliminary, up 2.3%, well above the under 2% expected, and it really is significantly stronger than the last quarter. The first quarter last was 1 year since we had such weak productivity, up 2.
All right, he's tripping all over this. Non-farm productivity comes in at 2.3, which is higher than the 1.8 expected. Unit labor costs came in way lower than expected at 0.9 versus the 1.7 expected. And then initial jobless claims did rise above expectations to 249 versus the 230 1.36 expected. Continuing claims also coming in a little bit hotter at 1.877. However, you did have a downward revision of about 7,000, but you still came in 22,000 more than expected. So you're net up 15K there on continuing claims. Non-farm productivity did get revised up on the prior, and unit labor costs did get revised down on the prior. That's for Q2 preliminary. So basically what I'm seeing here is it looks like you're getting lower labor costs, more productivity, but also more claims. So these are things that should drive interest in another cut. All right. So we'll see. But what you're getting as a reaction now is you've got, my goodness, you've got NVIDIA up 3%. I was really hoping AMD would participate in this. Okay, here we go. It's got one little green candlestick. Oh, there's hope. It's up about 24 basis points. But so far, AMD has not really been participating in AMD's led rally. AMD reports earnings and NVIDIA takes it all. Sometimes you just get screwed. So, oops. Then you've got, let's see, Western Digital down 4.5%. Apple's up 1.1 right now. Look at Meta. Nice run on Meta. Really nice. You saw this pop right here at earnings. We came right off the 471 line, and we're now at almost 520. So really, really nice run there on Meta. Qualcomm actually down 1.1, and ARM Holdings down 9. Enphase rises about 1. IWM coming up about 35 basis points. Personally, I think the numbers have been so good, there should be a giant frickin' rally today and tomorrow. But, could be an oopsie doopsies and could be wrong. So far, it looks like I'm going to be wrong. But Tesla down about 33 basis points. You've got CrowdStrike up 174. You've got Upstart 165. Boeing, Amazon. Let's see, Amazon's popping off the 188 line here. Nice. Okay. What do we got here? Bullish. This is the 10-year, 20-year. Yeah, the 20-year TMF just doesn't move as much as the shorter terms. And I think that's why people are getting a little frustrated with how long TMF is going to take to actually move. But what do we got? Coinbase. How is Coinbase up 2.25% in pre-market with Bitcoin taking a little bit of a hit there? I don't know. It's going to be an interesting one. Okay, so looking at the Qs, obviously zoomed out on the day, getting that bounce off the 460, zooming in a little bit. Looks to me like we've got 69 basis points of lead there in the Qs. We'll see how much of that holds on. We do today get ISM pricing. So we get ISM prices paid, ISM manufacturing, and ISM new orders. That's going to be interesting. And let's see here. Okay. All right, what else do we have here? Let's see. Okay. Israel killed the leader of Hamas's armed wing in a strike in Gaza in July. Hamas did not confirm or deny the death. Okay, fine. Let's see here. Economist, Doomberg. Bill Ackman's not taking his hedge fund public. Yeah, it's probably a challenging time for a hedge fund to go public, but who knows? And also, I don't know when the last time was that has been done. It seems a little more rare. Hedge funds usually private instruments. But anyway, okay. So yeah, I guess his fund, like he was planning on raising like $25 billion, and then that went down to basically, never mind, we're giving up. Interesting. Okay. Let's see here. All right. Yields drop. Dollar pairs gains after joblessness claims rise. Oh yeah, did yields drop? Let's find out. Oh, there we go. Okay, let's see what we have on. Excuse me, on yields. Oh wow, we're only at 4.2 on the 10-year. Holy smokes, an 8.5 basis point drop. Holy crap. Oh man, and the 2-year just dropped 9.5 basis points. So that's a bullish steepening in the yield curve, because bond prices are going up, and therefore, and these yields are tightening. But not much of a tighten. I mean, maybe like we're at negative 21 basis points there, so maybe you moved up like 3. So, kind of boring. All right, let's see here. How about oil? Oil, 81.24. Gold's almost at 2,500. All right. Well, we'll see. So what else we got here? How interesting. You're getting some red candles after this data here. Looks like Apple's coming in with a little bit of a red candle. You've got Meta. Meta. Let's change that. It's getting too cold in here. What is this? There we go. All right. So let's see here. Q's also legging down slightly. Look at that. Nvidia's giving up a little bit here. And all right, well, we'll see what the movements are today. But let's go take a brief listen here, and then we'll go get some other news.
We're going to have any sort of fiscal responsibility anytime soon, regardless of who is elected. And so how does that factor, that overhang?
Yeah, so the supply is an interesting kind of dynamic. I would say generally, the business cycle trumps the Treasury supply story, right? So if the Fed is cutting and we're moving into recession, that's really all that matters. The supply is a secondary factor, but I would say where it does play into our view is on the curve. So we do think that the yield curve will steepen into year end. There should be more term premium, so the spread between the 2-year and the 10-year should be wider. And some of that may be a function of expectations around the deficit in the next presidential cycle.
Steve, did you want to get in? Was that you?
Yeah, just to point out, it was kind of like Powell yesterday, to pick up on what Kelsey was saying. He put the job market on notice. Like, I am not going to tolerate any additional weakening there. He was kind of wagging his finger at him, and I thought that was interesting. It did kind of express some greater concern than I thought he had. It was interesting to me also that he was a bit more dovish than the statement, I thought itself. The way I put it,
100%.
Or Krista Guha put it this morning was, he said, the statement teed it up, and then the Fed chair hit it down the fairway pretty strongly. I don't know what that means for policy here, but I would note, guys, if you could put that January 2025 Fed funds contract up again, that the market is very aggressive here in terms of where it sees the Fed acting this year and even more aggressive for next year. So there's a lot of cuts built in. And I don't know if that means there's a lot of weakness built in terms of the outlook for the economy.
How many cuts do we have built in January of this year? Half a dozen, I do believe, which
Rick.
distant Fed, no, at the beginning of last year.
There were half a dozen, right.
Half a dozen. So my point is...
Well, for the year, not this January. This January coming up, we have 3 rate cuts priced in. Rick's talking about how many do we have priced in by the end of this year.
Extrapolate how many cuts are priced in this far in advance, you're not going to be very accurate. That would be my opinion.
We got to leave it there, guys. Thank you so much, Kelsey, Rick, and Steve. We do have some breaking news we want to get to. Eamon Javers has that. Eamon.
Cut him off.
Good morning, Melissa. At this hour, there is a massive prisoner swap internationally taking place between the United States, Russia, and other countries. NBC News is reporting that a senior administration official says that parties have agreed to a prisoner transfer, and they are now in a position where they expect prisoners soon to be in U.S. custody. That is, prisoners who are Americans who are being held in Russia, expected soon to be in U.S. custody. Of course, Russians being held by the United States, expected to be part of that transfer back to Russia. We are not in a position right now, Melissa, to report names to you of who may be involved in this prisoner transfer. But of course, the highest profile American being held in Russia is Evan Gershkovich, the Wall Street Journal reporter who's been held in a Russian prison for just over a year now. No official word on whether he is part of this transfer, but we'll be watching for more information as this spills out over the coming minutes and hours. But what we can report right now, Melissa, is that a massive prisoner transfer is underway between the United States, Russia, and other countries. Back over to you.
All right, keep us posted. Eamon Javers, thank you.
Thank you. Meantime, OPEC officials meeting today with a big focus on oil output from the group. But in America, it is all about natural gas, with some big new data coming out on just how we are getting our electricity. Brian Sullivan joins us now with more on both of those stories.
Yeah, bonjour, et ça va? Andrew Ross Sorkin, thank you very much. All right, folks, so here's the thing. Renewables, they are growing. That is the good news if you are looking for cleaner, sort of more renewable energy. Renewables continue to go up, but here's the new data point, and the reason I'm on your television right now. The United States just hit record natural gas use for the first 4 months of the year to make electricity. In other words, we have never used more natural gas to make the electricity for your air conditioning, your lights, and whatever than any time in history than we are right now. A lot of that is because the price of natural gas is low. When the price of gas goes down, utilities are like, give me some more here because that is the lowest cost input. So we are seeing yesterday the data fresh from the EIA and the federal government guys that we have never used more natural gas. Renewables, solar, wind, they are growing as well. That gas only growing 4% year over year, but that number was enough to hit a record. Solar is up, wind is up. So what's the problem? The problem is that hydro fell 20%, and a lot of people are concerned about nuclear. California, Diablo Canyon's been extended. It's about 9% of their entire daily electricity output. If they shut that down in a few years, will they just get it from natural gas or from solar? So, guys, the big news here is that natural gas, which, by the way, a byproduct of oil drilling, has never been used more in the first 4 months of a year to make power. I'm not sure anybody saw that coming.
Hey, Brian, before you go, so OPEC Plus meeting, of course, virtually, my understanding is, right, today. The group did not change current pace of output cuts, still 5.8 million, though, on the table. What does this all mean?
Yeah, thank you for reminding me there. I almost skipped over the whole OPEC thing. Actually, their announcement just came out. No change in their current output cuts, Andrew, was expected, and that's what we got. This was kind of like a smaller virtual meeting. You got the big in-person meeting coming up in Vienna.
I love all the sirens you hear in the background when they do this. All right, I'm going to pull off this. So what's really interesting today is it looks like, I mean, there's a chance ARM could, I mean, like, it's like ARM's numbers were not that bad. They barely missed. They missed EPS on guidance by like 2 pennies, which is like 6%. So a 6 percentage point miss, and the sucker's down like 10.5%. I don't know, man. This is weird, in my opinion. And so I'm like totally caught off guard here. In my opinion, we should be mega rallying on. I wasn't expecting Powell to set up the September rate cut. He did. All the data's been better, and earnings have been pretty freaking phenomenal. So I'm like, what the hell? But whatever, you know, that's the market for you sometimes, eh? Look at this. So but then again, this is pre-market, so who knows? We'll see. We'll see. Is that true about Jim Cramer? Oh God, I'm gonna lose a lot of money then. Let's see here. Where's that tweet? I don't see it. Oh, it's like a reply. Or maybe it's a reply somewhere. Anyway, somebody says Kramer just bumped AMD. We're screwed. Yeah. Oh well. So, okay. Let's go into taking a look at some of the news. And let's go for... Alright, what are we going to do? Let's go... How about we go for... Let's go with... Let's see what... you know what? We'll do it over here today. Hopefully it doesn't all crash on us again, but if it does, it does. Okie dokie then. So, let's see what we have today from the suits. The suits. So, well, let's start with, let's see here. No, hedge funds. It looked like there was some talk that hedge funds were buying the dip. I don't know if that's true. It may have just been talk. Oh, let's go make sure that's good. So what do we got here? Yeah, in both cases. Oh, okay. I was hoping for some Fed commentary. Actually, a lot of these pieces, people haven't written their Fed pieces yet. Well, that's boring. That doesn't give us much to look at then. So I wanted to see some Fed reaction. Yeah, that's really what you need right now. Is you need to see what the okay. Let me look over here. You got to see what the suits are saying in reaction to JPOW. Again, I was blown away. I thought he was way more dovish than I anticipated. So, your boy Kevin was wrong on that one. Okay. Euro crisis. Let's try. Michael Ferrelli. He always does a good one. Powell has a labor market bee in his bonnet. Okay, what is this, like a reference to the Paris Olympics and some French commentary here? Let's see. This will be interesting. Alright. I'd like to get... Here we go. While the Fed left rates on hold today, both the FOMC statement and Powell's press conference strongly hinted that the first cut is likely coming at the next meeting in September. Okay, the statement shifted to an equal attentiveness. Yep, that's pretty much what I said. Powell also conceded that some of the committee explored the possibility of cutting today. That's true. Covered that also. September cut is on the table. I mean, he was pretty blunt. BTC, what are you doing? 64.7. FOMC statement had offsetting hawkish and dovish surprises in the description of policy. Okay. Press conference. 2 issues permeated. Why didn't they cut today? Data dependent, not data point dependent. Yeah, whatever. Not quite at that point today. Fine. All right, is this just basically a summary over here? Yeah, okay. Wow, that was boring. Basically just gave a little summary there of what we've already gone through that summary. Yeah, again, I just want to be clear. I've so been expecting that if we got good earnings and a good Powell, that we'd get a big fat rally here. Wrong so far. Okay, so Goldman. Let's see here. Conviction list. Dollar General, Philip Morris, S&P Global Index. Boring. Okay. Let's see what else. What else? Let's see here. Barclay, macro view. Yes. Yes! Let's find out what we have here. I press this button. Central banks are in sharp focus this week. What does this mean for markets? We remain short duration. Data does not warrant aggressive cuts. Yeah, that's fair. Data do not. Oh, data do not. Okay, yeah, we're going to go with that. GDP forecast, evolution, U.S. They think it'll stay above 2%. Faith in the U.S. unemployment rate may be misplaced, okay? Markets are pricing in an extended rate-cutting cycle, reflecting softer inflation readings and inferences about a cooling jobs market. The latter party reflects a perception that the unemployment rate, produced by the BLS survey, provides a better signal than the payroll report. The consensus, blah, 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 blah. U.S. elephant in the room. Okay, they're basically suggesting here if we get a big rollover on that unemployment rate, they're just going to tank rates way faster than having a longer-term cutting cycle. That I believe. And you got another jobs report tomorrow. So maybe, I mean, could it be that's what markets are waiting for? Jobs report tomorrow? I mean, I suppose, you know, that could reiterate what Powell's been waiting for. It's the signal to cut, basically. Jobless claims are beginning to worsen. Yeah, we saw that this morning, too. So you're getting that rollover. You know, JOLTS heavily propped up by the government. Headline was still good, though. ECI comes in lower than expected. You're certainly not seeing employment costs move up. And you saw that today as well. Unit labor costs coming in at 0.9 versus the 1.7% survey. It's a big miss. And a downward revision prior to that. It's pretty big. Pretty big. So, somebody's asking Tesla news. What's the Tesla news? Let's see if the market cares about Tesla news. Let's see. Why is Tesla down? Let's see. Tesla. Oh, a little bit of give back from yesterday. So let's see. Dropbox co-founder to sue J.P. Morgan. Well, that's unfortunate. Hertz falls short of estimates as soured Tesla bet fuels losses. RIP. Let's see what's going on with Hertz. That's only down 3-4. Big deal. And here's BTC. Let's get that back down to the 1 minute. Okay. All right. What else? Let's see here. Biggest thing is nobody talking about is this time is different and the yield curve inversion doesn't mean anything. Yeah, I agree with you. You know, I actually do agree. It's possible that, you know, like the thing is when joblessness rolls, it rolls over fast. So it does make you wonder. I mean, so far, it's like slowly trickling up, and you have a Powell who's like, oh, it's normalizing. You know what I want to do is I want to look at how normal these unemployment claims are. Let's take another sip of coffee here. Oh, thank you for the $1.99 here. Brand says, I can hear his fans. The supporters are so loud. We love them all. Thank you. Isaac says, AMD killed me. Me too. Yeah, dude, what the hell? But anyway. Okay, let's go to unemployment claims. St. Louis Fred. Yeah, okay, so let's get rid of COVID. Okay. So, what we got here... Oh, wow. I mean, honestly, it's pretty nominal. And remember, claims don't really rise until the end of a recession anyway. Huh. Yeah. This is really interesting. I mean, we're lower than, like, any of the lows here. With the exception of, like, over here. 2018. 2018 got pretty low. So, like, if I kill that right tail, you know, historically, before, what is that? There you go. That's about where we sit now. Historically, we are as low as 2017 over here. We're lower than anything else over here in terms of unemployment claims. That's why JPOW don't care that much. Now, obviously, if you go, right into 2018-19, you get some that are slightly lower, but not much. So I could see why Powell might. Yeah, somebody here says Powell kind of has a point. Yeah, I agree. Mark says I have an AMD AUG 16 call. See, that's smart. Because you actually have time. So I don't know. I think what I would probably do, not personalized advice, obviously, is I would probably wait until the jobs data tomorrow, or yeah, because I mean, if you wait until jobs data tomorrow, literally every potential negative catalyst, whether it came out positive or negative, any potential catalyst has been covered. Amazon, Apple's over, jobless claims are over, everything is behind us. And is it possible that now you have, how should I say, all catalysts clear and now the market rallies? I don't know. I will say I thought that if we got good earnings and a bullish Powell, we would have had a substantial rally. I also thought that if earnings sucked, no matter what Powell did, the market would have tanked. But what we actually have is good earnings, good Powell, and, some tenuousness in the market here. And Qs are trending down going into the open. They're still up right now, about 49, 47 bips, but it's dropping, AMD's just been bleeding since earnings, and it's like, wow, okay, that doesn't make sense, but whatever. It's almost like the little runs have just been little profit takes. Yeah. So somebody here says rally will continue to run until the September cut. Just not seeing that aggressiveness right now. No. Can you take a look at Lumen? Small cap with a 9% yield? Uh-oh. IWM and Webull killed me. Up 550 closed and Webull went on. Oh, that sucks picking up pennies. Did you put the order in through the algorithmic or just like the normal non-alga? Could you take a quick look at property growth rate in Perth, Western Australia? How the hell am I supposed to figure that out? Hold on, let me look at what this lumnundum thing is. What'd you call it? You called it Lumn. Lumn. Lumen Technologies. It's a $3.2 billion company. That's not a small cap. I mean, it's a small cap. It's not. Well, is it? That's more like mid. Over $2 billion. 27,000 employees. All right, let me go to their investor relations. All right, what do we got here? Lumen. Oh, is this the LiDAR company? Wait, their homepage is just investor relations? Okay. Oh, it's IR dot. Oh, okay. Let's find out. So, and then I'll look at Perth. Okay. We are a facilities-based technology and communications company. Broad array of integrated products Most interconnected. What is this? Lumen, flagship brand for serving the enterprise and wholesale markets. Quantum Fiber, fiber-based service. CenturyLink, mass market copper-based services. So that's probably like coax. With approximately 170,000 on-net buildings and 350,000 route miles of fiber optic cable, we're one of the largest community. Okay, so they provide comm infrastructure, basically, right? And that's what it sounds like, communications infrastructure. And then I'm going to look at Perth. Hold on. I don't want to give anyone, like, an epileptic seizure here. As I scroll like a madman. Okay, here we go. Operating revenue, $14 billion. Operating loss, $9 billion. Oh, wow. Wait, oh, but they took a goodwill impairment of, like, 10. Oh, so if it wasn't for this goodwill impairment, they'd actually probably be profitable. And their depreciation here. They actually probably have good cash flow then. No, cash flow negative. Capital, resource intensive business. Liabilities, long-term debt, $19 billion, 3.5 current. Oof, they don't even have enough cash to cover their current liabilities. I don't know. It's an indebted company that's very capital intensive. That's a tough one. Not saying it can't do well, but the reason it probably has that sort of yield is because, you know, there's risk. Oh, wow. And it's actually, like, the stock just rocketed over the last, like, few days. Oh, so it's turned into a momentum play. Oh, okay. Well, why don't you just say so? Oh, now they partnered with Microsoft for data centers? Oh, that's why. Okay, that might be why they're jumping. They have, it's a pump on the news and it'll dump. Yeah, interesting. Yeah. Yeah, that's exactly, I think, what's happening here is you've got enthusiasm over the news. But this is a very expensive business. And, yeah, running on that Microsoft, like, oh, partnering with Microsoft. Okay, so what? You going to run, 1% more cables? Like, how much can you really charge for that? I don't know. That's a little crazy. All right. Let's go with Perth, Australia. Population. Let's see what the population is. 1.9. Well, y'all are growing like crazy. Your population almost doubled in the last 20 years. It's very good. Very good. It's time for Aussie hack. Aussie hack. That's what we need. House hack and Aussie hack. Perth, Australia. What's the poverty rate out there? Uh, 1 in 8 in Perth. 1 divided by 8. What? 1 divided by 8. Oh, why is it? There we go. My numlock was off. 12.5%. That's totally fine. And then what's the median income? Somebody says Perth is a boom-bust mining town, highly reliant on the Chinese economy. Huh. Well, it's growing like crazy. With 1.9 million people, I think of it as more than just a town. Actually, it looks pretty beautiful. It's on the coast, probably Mediterranean climate. Honestly, they could probably always attract different types of jobs. 2.8% German. Okay. Economy. Yeah. Major mining, petrol, and agricultural export industry being located. Wait, what is this? By virtue of its population and role as administrative center for business and government. Dominates Western Australia despite the major mining, petroleum, and agricultural export industries being located elsewhere in the state. I don't really understand what they're saying there. Why is that? Just why they write it like that? Honestly, it sounds kind of like a cool place. Hub of tech startups. That's cool. Okay. All right. Yeah. I mean, looks good to me. Couldn't argue betting against that. The world down under. Exactly. Very similar to Canada, except it has the weather. It has the weather. Love Aussie land, but like Florida, the majority live on the coast. I mean that's true everywhere, right? You know, majority of people live on the coast. Oh, you're currently in England and are moving down under. Yeah, I mean, go there and rent for a little bit and learn the market. Huh. It looks like there's a lot of feedback here in the comments for you. All right. Let's see here. Q's testing neckline of Head and Shoulders. Some strong resistance. So a break of that would mean rally is very much on the table. Yeah. All right. Oh, did NIO report delivery numbers? I didn't notice. Let's take a look. Maybe that's why Tesla's down. Let's see here. NIO. Oh, NIO's up. It's just Tesla's down like 1% today. Yeah, Tesla taking a little bit of a dive. Dive! All right, well, we'll see. We got about 22 minutes to go until the market opens up. And let's take a listen. Oh, let's see. Oh, they're referencing a part of the call. I listened to the whole call yesterday. It's actually pretty good.
He probably did it. I mean, look, he's authoritative. Dave, he's an authoritative fellow.
That's.
And what he's basically saying is all that stuff about you think AI is hype. Wait a second. They're finding uses every day. And David, I keep coming back to that productivity number. If you keep finding uses, why do you need to hire as many people?
You don't.
And then you come back to, like, do I need you? Yeah, I will always need you.
You'll always need me.
Yes. Yeah.
I think our viewers are well aware of that.
What the heck are they doing?
Whatever happened to the metaverse?
That was quite annoying. That'll wake you up.
Yeah, we're all in the metaverse.
What is Reality Labs is still sort of when you put the Ray-Bans on, are you in the metaverse?
Right? You can take pictures. The Ray-Bans are great, David. You can say, what's that? You're on 14th Street and there's like a hub up at Whole Foods. And you say to your, this is actually true, okay? You say to your glasses, what's that hub up on 14th Street? And it comes back and says, Whole Foods is featuring pineapples for 35 cents. That's the reality. Don't you? You've always wanted that.
Oh, yes. I love pineapple.
So
I'm hoping for it.
It was meant to be more of a rubric.
Yes. What's on the line tonight for Apple, Amazon regarding all this spend?
Okay, so Apple's harder because we want to hear whether Alphabet is going to lie with them or ChatGPT because it's obvious. Look, Siri's fabulous. I don't want to get too much into Siri because Siri will put on play the Springsteen song. I was playing some Springsteen this morning, and it'll come right up. Siri's much better than it was. I don't know if you guys have been in touch with Siri, but you can say, listen, play Born in the USA, and it's really good now. So we have to hear whether they need someone else as much as we think. And then Amazon is just, again, like Zuckerberg, Amazon's going to say, you want advertising, you want to find it right here on our site. My problem is so many people use this, and it's so easy to toggle between my Facebook and my ad, or my Insta, my ad, that here I have to go through 2 steps. So Amazon's going to have to prove itself whether that's a better advertising reward. It's not clear.
But we're also going to keep an eye on costs. We're going to keep an eye on, to your point, advertising, I'm sure will have once again been very strong.
Oh,
we've seen the complete dissolution of the old media in terms of their ability
Not the Olympics, David, not the croissants. Don't go there.
All right, sorry, you're right. Other than the Olympics, Carl, I apologize. But, I mean, the Amazon numbers are going to be extraordinary in terms of advertising. I'm not saying they're going to beat or not beat, none of those things. But just the number themselves. Not to mention, of course, again, back to the whole thing, the idea of CapEx and how much is spent by these companies.
Right, we don't know.
These hyperscalers and what they're going to need to spend.
These are countries. We should stop calling them hyperscalers.
And you brought it up. I know we had that argument about power in terms of will you buy an actual electricity company. They're, regulated. It's unlikely. But you were right in the larger context. Power is all as well an incredibly important component of all of this CapEx spend.
Right. Now,
securing the power, building the data center where it needs to be built, getting what you need from whatever provider you can get it from.
Well, Rusty Brazil from RBN comes out today and says it's really only the Northeast where it could happen, that they need so much natural gas that they might be able to, there could be a deal. But yes, I think you're right. I don't think the natural gas company's going to get a bid, but there's going to be a long-term contract.
No, but I mean, there's also talk that you go to states that have an excess amount of power for these kinds of things.
And
so
right now, the Northeast is almost maxed out.
Yeah, Montana.
Virginia's maxed out.
You may want to look at land in Montana, Jim. Maybe you want to open your theme park there now.
I looked at Big Sky about 10 days ago.
Did you?
Yeah,
oh,
I found a place.
What happened with the Ireland castle? Is that happening?
That traded ahead. I bid $1 million, and they traded ahead at 1.2. $8 million Reno. The Big Sky still on the table. 1.5.
Always the Reno.
We'll take a quick break. We're going to get to the chip names. We'll look at ARM and Qualcomm, Western Dig, see how they're moving the markets today. We'll get to Shack, Etsy, Carvana, and we'll talk yields as the Bank of England joins Canada and the ECB in cutting. Stay with us.
I'm very confused. And I want to write out my confusion here. Give me a second here. All right. So I'm just watching the market sort of bleed into the open, and I'm like, the data's good. So I don't really, I find myself a little confused, a little torn in terms of what's going on, and it's odd. So it makes me wonder: is there something more underlyingly bearish that is suppressing really good news and good data, right? I don't know. I don't know what that is, but it's odd. That's the way I look at it. It's quite odd. So so I want to let's get a little notepad here. See, I thought after what we had yesterday and earnings, it's like, okay, the catalysts are clear. This should be good then. But it seems like there's like an underlying nervousness that just continues. So, jobs. Labor costs, not an issue. ECI low, productivity up, labor unit costs down today. Unemployment claims historically still very low, even around 300K from where we are now would be okay. Then we've got, earnings. AMD, MSFT, Meta, QCOM, very good. ARM, missed by 6%. Big deal, right? Okay. Let's see here. Then you have Powell. Great. Teed up. The sept cut. Wasn't expecting that. Then you've got, you know, Powell basically calling for soft landing, right? So everything went bullish, or everything went positive in terms of how it could have gone. Remaining caddies. Jobs report tomorrow. Amazon, Apple today. But following jolts and government openings, I don't think we'll see a big divergence tomorrow. And usually when you do, it's too late anyway. Maybe Powell knows something. He implied they'd go much bigger cuts if they needed to. Conquered inflation. So, you know, yeah, I mean, you have election uncertainty, sure. But you still have Sept, October, and Q3 earnings in October to go for that. You literally have a whole other earnings cycle to go. Why is there no more core version of jobless claims without the government? Yeah, that's a good point. Recession, AI taking jobs, people feel poor, real estate. Yeah, we're back up. Might be right. Why are you writing this? To try to figure out what's going on, bro. I'm trying to write all this down because, you know, right now the market's falling basically into the open, and I'm like, what? This is completely the opposite of what I would anticipate. Excuse me. Goodness gracious. So it's weird. Oops. Oh, dropped my mic. Well, not really my mic, my little earpiece thingy. Hello, hello. Here we go. So it's weird. That's all I'm saying. It's very, very odd. Let's listen to what Jimbo has to say. Maybe he'll give us some answers.
With ARM really taking share, AMD really taking share, what does it say?
Intel is just living to fight another day, don't you think? Build those plants, become the leader once again. If Taiwan is not defended under a potential Trump administration, they'll be in a very good position, won't they, Jim?
Very good answer.
Won't they?
Yes, yeah. Very good answer, and it's very diplomatic, and it's better than what I would have
said.
They're
laying off a lot of people to sort of cut costs.
Waiting for numbers on that. The worst Dow stock of the year. Mobileye is going to open down 14.
Oh, man.
What happened?
Just on numbers, yeah.
It hurts. It got hurts. That's not...
You don't want to get hurts.
You don't want to get hurts. Right. No. Don't get hurts.
We will talk about some cars, a bunch of figures out of the European automakers. Carvana, of course, Goodyear, Toyota, Race. We'll get Kramer's Mad Dash and the opening bell in less than 10 minutes.
At U.S. Bank, we think the best relationships should feel easy. Laughing should feel easy.
So, I don't know. I guess I just don't know. This is very, very odd. Very odd. And it's much more odd than I would have anticipated for reaction here. So I feel a little befuddled. Befoodled, confused. But oh well, I suppose. Yeah. Well, all right. So 10-year channel S&P 500 resistance over support resistance overextended, not too much risk, not enough reward. Yeah. Maybe. Somebody says my Carvana YOLO calls are printing. Wow. Good for you. Guarantee you it flips. Yeah. You like flips up in the morning, like once we open, everything starts rallying. Oh yeah, I agree. That's possible. Russian prisoner swap, yeah. All right, let's listen to the doomers. You know, maybe the doomers have something to tell us. Let's listen in over here.
All right, Tom, really great to get that preview with you. Really appreciate you taking the time. That is Maxim Group senior analyst Tom Forte. And it's interesting, of course, his comments on that AI upgrade cycle. Remember, Steve Eisman, we interviewed him a couple weeks ago. That's one of the big reasons why he's bullish on Apple. Of course, it'll be interesting to see what the company reports after the bell. But coming up on this program, we're going to take a look at the companies making the most social buzz today next. This is Bloomberg.
Cheers. Cheers. Okay. They always all go to commercial. right when I switch to them. It's like, why can't they have any good like quality information out there?
Our Americans died. I guess they just wanted to wrap it up while they could, and they're wrapping it up.
Here, I'm sure they'll talk finance.
Just please. It is Thursday morning. Where are we going here? I see some green. Up 30 for the Dow, up 36 for the Nasdaq. The opening bell is next.
Nope, going straight to commercial. Yeah. All right. Well. Very, very strange. But you know what? That is the way the cookie it crumble. It sometimes it does things we do not expect the cookie to do. Oh boy. Oh boy. Oh boy. Oh well. Okay. So next up we shall consider what is there to consider? Let's go here. Let's see here. Try to see where some news is. Okie dokie. Just try to understand L markets today. Fed detests the idea that political considerations influence them. Yeah, we already know that. Russians release... What is this? Russia releases journalists. Yeah, we heard the Wall Street Journal one. Some other ones, I guess, getting released too. South Park prediction coming through true. An Italian female boxer got beat by a biological male, and I guess that was predicted in South Park. I thought it was usually is it? Yeah, it's South Park that predicts all this stuff. Oh, that's scary. How do they do it? I mean, I feel like they pick up on the social trends and then they pick it up. That's crazy. Yeah, look at this. See, I'm so confused. I gotta play this. It's Simpsons usually. That's what it is. Yeah, exactly. Okay. So you got. I mean, yeah. That's pretty much what happened. And it's the strong woman. Oh, no. I hate that stuff, by the way. Like, biological men should not be playing in women's sports. That's just effed up, but who am I to say anything? I'm here wondering why the Qs are selling off broadly. Yeah, I feel like the market shift from pricing out inflation to pricing in a recession. Yeah. Yeah. I think you're right. That's really weird. So then how do you protect yourself for that, you know? So that's the thing. Nobody knows. Let's see, we got 4 minutes to go until the opening bell. Flip around over here. Let's see. Okay, yeah. Everybody's just on commercial. Very boring. Okay. Let's go. Like, and then it makes you wonder too, what do you want to buy in case there is a recession? Lots of puts. Ay. Yeah, that's just crazy. All right, so you know, but if you start getting recessionary dynamics, it's just going to plummet rates rapidly. The question is that going to be enough? Plummet rates? You know, theoretically, everything should get burned. But yeah, look at that. The Qs are just giving up on everything. This is remarkable. Remarkably challenging. Oh, well, I don't know. Don't know what it is. But let's listen in over here.
You know, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting.
That's the Fed chair from yesterday afternoon talking about both sides of the dual mandate, saying he doesn't want to see more deterioration in the labor market. Jim claims we're the highest since August today.
No, it's happening really quickly. And we're going to be speaking to Ernie Garcia, CEO of Carvana, and they're the second largest in the used car market. And used car prices are now almost back to 2019. They were one of the worst parts. So all that really that J-PAL has that's bad is homes. And what we found was when you take the mortgage rate up, it doesn't build more homes. So that's really the only sticky point. I think it's important to point out that food has not come down enough. That's why people go into Costco and Walmart. And clothing has not come down enough, but that's why people go into TJX. And that's just the way it is. The customers changed the behavior radically in the last 90 days.
Yeah,
really
big journal piece today. The era of high food inflation is over. It's over. And the warnings we've gotten lately, Jim, from Nestle, you mentioned Hershey earlier.
Hershey was really, really bad. That was a major miss. And David, what's happened, I think, is that a lot of companies thought they'd get away with it.
Yeah.
You know that? They thought that the consumer didn't notice. Yeah. That's one of the reasons why I like McDonald's. They saw it.
Hershey says consumers pulling back on discretionary spending.
Yeah.
Right at the very beginning of their press release. You can see the stock is going to be down. They also, that hedge on cocoa is not going to last that long.
Showed that the weakest part of the S&P so far is discretionary items. And it's almost double what it was before. That's who's missing their numbers. And I think that Powell should be looking at that because it's not some government figure. It's real world. It's real world, Powell.
Let's get the opening bell here at the big board. It's a moment of magic, a nonprofit focused on improving the lives of vulnerable and underserved children. At the NASDAQ, its first team.
All right. Let's see what we got here. So we got the Qs look like they're trying to pull a bounce here. Nvidia Trying to find direction. Oh, look, AMD. Nice move on AMD. Oh, smokes. Finally, you got a breakout above the 145. Enphase trying to move up nicely here. Okay. AMD's really got a nice little rally going right here. Finally picking up, eh? Tesla down some more, though. Yeah, Tesla getting hit. How's Microsoft doing this morning? Microsoft, it's up a, it's up a smidgen pigeon. Okay, so what about, let's see here. What aboutism? Why the Qs? Hertz actually ended up going positive. That's crazy. Okay, so Hertz went positive. Tesla is now rallying. See, this is what we should be seeing. The market should be rallying. That's my expectation. And so that bleed into the open was just weird because all the data has been good, suggesting that we should be going up. Here come the Qs are trying to come back. Tesla's trying to come back too right here. You've got Hertz moving up. Enphase up a couple percent. IWM's moving up. Okay. What is this? You got... oh, look, the Q's red candle again. This is very, very, very bizarre. Well, let's listen in over here.
What we've historically had, except for we do have an election year, and we do not have an incumbent running. The incumbent usually has helped the situation. I mean, historically, I'm not saying, I'm not making it political.
No, you're right.
Huh.
If you look at their cloud, their AWS, that growth rate, 17% is expected. We've seen stronger numbers, but 17 is still decent.
Now, Microsoft, I know to my own cost that...
Qs are now pushing up. Okay, here we go. Maybe we are going to get the rally today.
With OpenAI. Now, I don't know what that means, but what's Microsoft saying about this partnership?
Yeah, that's their reported $13 billion investment. And now OpenAI is a competitor because they've launched a search engine. It's a prototype called Search GPT. And it's a collaboration with various news organizations to populate the answers and get the most accurate results. Eventually, they plan to build it into Chat GPT. So this search engine could be a competitor to Microsoft's Bing and Google.
So why's the stock up?
Well, because they still have a nice chunk of their money in OpenAI.
And because Bing doesn't matter. I mean, when was the last time you went to Bing?
I use it all the time.
Oh, please.
I'm a Microsoft shareholder.
Oh, please.
Well, I mean, a lot of people use the built-in Internet Explorer browser, and they don't even know they're using Bing. People don't go to Bing.com. They just use Bing because it says Internet, and then they click that. So, like Steve, Commodity Steve, spawns in to talk about his Dell. Makes sense. You know, you need to use Internet Explorer to download Google Chrome, should you have the desire to do that.
China, Qualcomm makes a ton of chips, but mostly for smartphones. That part of their business up 12% in the quarter. They're forecasting even better numbers for this quarter because of AI phone upgrades, but it's the trade curbs that are hurting the stock.
And then we have a chip designer, that would be ARM, disappointing report, and they're down 8%?
This completely, I didn't know anything that I'm about to tell you. So they, as you noted, they design chips, but they make money from the royalties. So it's great that they're designing all of these chips in like every device,
well, yeah,
but they have to wait.
Risk language.
Product before the royalties could come in, and that could take 4 years in some cases.
Didn't realize that.
So, I mean, this stock has gone gangbusters since their IPO. It's, I believe, more than doubled off the top of my head. But that's why it's down today, because they have a tepid forecast for the current quarter.
Here's the story which really intrigues me. It's not a weight loss thing.
Yeah.
Eli Lilly's weight loss drug is showing positive results as a treatment for heart failure.
Life-saving.
It looks like a major success.
Life-saving. So Zepbound is shown in a late-stage trial to reduce the risk of hospitalization and death by 38%. in patients that have a common form of heart disease who are also obese. So this is a much wider benefit for the weight loss drugs. I mean, it seems like it's all too good to be true. I know a lot of this information is early, but it's looking promising.
Do you have any
nice fat red candle that just came across on Tesla? Holy smokes. It's a big old red candlestick that just came across on Tesla. And I wonder why. I mean, we do have ISM data at 7. Yeah, 7 a.m. for data. Look at that. The Q's just, they're giving up. What? This is such a bizarre market. This is crazy. Yeah, there's Tesla. Okay. All right. And Moderna's down like 19% right now. That's wild. The Qs are only up about 7 basis points. IWM's trying to move up. Oh, it's all over the place today. All right, let's listen in here.
I actually have not watched the
dominant.
1500.
She has 20 of the top times
of
ever
the 20
recorded.
top times.
She's a Comcast machine.
She is the greatest of all time. Female swimmer, without a doubt.
Too. She teased
She's
you.
amazing. And yeah,
and nice.
I treasure when I met her years ago at the U.S. Open. I took a picture with her, Katie. It's
fabulous.
She's great. Well, Jonathan Ledecky's her uncle, I think.
Yeah, I like John from college.
But
Jim,
yes, and I've been in the pool a lot lately, trying to, I'm trying to hit that Olympics for the.
For 2028.
For the certain age over, certain height below, the whole thing. If I can just get it right.
Someone says maybe there's fear due to the Fed lowering rates. Yeah, maybe. But, it could just be, maybe that's what it is. You just get sort of a market that kind of tops out until the Fed actually, makes some kind of rate, like takes some actual rate action. Very interesting. No, Qs are back to rising again now. So Q's up, Microsoft up, AMD up, IWM's up, Tesla's down, but Enphase is up. So Bitcoin's still legging down. And then Apple's up about 30 basis points, had a little bit of leg down. ARM is actually recovering. That's interesting. Yeah, ARM's recovering right now. It's only down 7%. It was down 10% in the pre-market. Meta's up 8, dropped a couple of percent there. Ubiquity's up a bit again. JetBlue down another percent. And they were down a bit yesterday too. Okay. Oh yeah, see? ARM. It's recovering on this. ARM now pushing through resistance here. 134 is the level for that. And Tesla's bobbing around 2 with the Qs. Qs moving up. Is Etsy down 10%? Let me see. Etsy? Oh, wow. Yeah, Etsy really took a hit. Huh. All right, let's go back to here for a moment.
They've got there's 2 million screws in a 787.
That's a lot of screws.
2 million screws. That's a lot of screws. A whole lot of screws.
Yeah.
To our point yesterday, Jim, about industrials leading again. C.H. Robinson, Air Products, Cummins, FMC.
I have Cummins on tonight.
You do?
And I salute them. They have 70,000 natural gas trucks. They have, oh man, this is fantastic. I'm so glad we have them. They are just a technology machine. And people regard engines as like, are you giving me a break? But they have engines that can run on any, Jen Rumsey has engines that can run on any fuel, whatever you need. This is the new economy writ large, and that company is people think you can't make money in cyclicals, that you can only make money in tech. That's a tech machine.
Back to Howmet for a second. Was it
How I Met My
Precision
Mother?
Cast Parts? Were they in that business too? That's owned by Berkshire,
Yeah, well, they're
right?
forgings, yes.
Yeah.
Although people said it's not doing that well, I think at this point the cycle's probably doing very well.
Okay.
By the way, if Boeing can get its act together.
Q's really trying to pick up a rally here now. So Q's moving up, Enphase moving up, IWM, AMD, Microsoft, all of them moving up.
That's kind of what, I'm not saying that they're in trouble. I'm saying that they would do better if they raised a lot of money. That would be like a godsend if they raised money.
Boeing to raise a lot of money? Yikes. That's his
point,
opinion.
a better exit environment.
Amoroso.
Anastasia, we have less than a minute left, but I want to go back to that point about access because it's interesting. If you take a look in the ETF world, and retail investors love ETFs, issuers from BlackRock to Goldman to Invesco are looking at ways to fit private assets into ETFs somehow. When you think about that structure, do you think that's a possibility?
Well, it might be a possibility, but I think a lot of work has to go into it. And I think there's a lot of industry appreciation for you can't just put an illiquid asset. Liquid, format and call it a day. There's a lot of considerations that have to be given, and I truly believe that the industry is being thoughtful about that. I mean, to the point of access, of course, a private investor would prefer to have the liquidity, but you have to put really careful guardrails around that if you're dealing with private markets.
$20 says Katie rather see a private equity ETF before a Solana ETF.
There you go.
That is
absolutely.
Asia Amoroso of iCapital. Stick with us. More markets ahead. Busy earnings season. This is Bloomberg.
Yeah. Okay. So Microsoft's pushing up. AMD is pretty much flat, which is also shocking. But the Qs have recovered here. And now you're really rallying on the Qs. ARM gave up. Look at that rejection. 134 rejection here. Just so you know, what you need for AMD is you really need to confirm a breakout on 145. And it can't happen soon enough. But Microsoft is kicking butt right now. It's moving. I think Microsoft goes to 230. And the Qs are rallying. This is what I would have expected. I thought it was weird that the market was moving down. And then you've got IWM here, which is up a little bit as well. Okay. Enphase gave up a bit. Tesla's recovering. Nvidia is coming back up. Bitcoin's bouncing a little bit. Apple found its floor. You know, another thing that could be going on is you could have some end of quarter rebalancing. Or sorry, not end of quarter, end of month. Dude, Microsoft's where it's at right now. Let's go. But anyway, sometimes what happens is you get these end of month movements. And the end of month movements are so profit taking. Oh, they want to show their clients how great everything is, blah, 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 blah. And it sort of screws up the trajectory of what the market would otherwise be doing. Because like we wrote out, on our little piece of paper here, virtual notepad, everything suggests we should have a massive rally. Everything is pushing for massive rally here. And election uncertainty, we still have time for that. Election uncertainty only gets added into the mix when all the other stuff is bad. But if all the other stuff is good, then that's not that bad. So we should be having a day of strong up. Should. Exactly. Today is August 1st. And what I'm saying is yesterday. Yesterday you had some of that sell down. which maybe gets exacerbated in pre-market. But now that the market is open for today and throughout the day, it should be up. It's my thesis. Hold on. S&P, global U.S. manufacturing. It came in at expectations. Big deal. All right. So here are the Qs. Nice run on the Qs. You've got IWM is getting a little stuck. ARM totally gave up when it got rejected there. This is what's going on with Ulta. Let's see. Ulta. Wow. That's crazy, huh? Look at that. It's right at one of these lines that I had drawn. 368 line. Oh, it's right below it now. Oof. That's crazy. I don't know. Wow, yeah, look at the Qs. It wants to keep going. I mean, that's what I would anticipate. Ah, all right, whatever. Let's listen in over here.
Not as much. That's after the CFO says that higher-end consumers are visiting more often. Michael Halen of Bloomberg Intelligence joins us now. Let's start with Shake Shack, because in the commercial break, you described the call as awesome. What actually happened?
Yeah, new CEO Rob Lynch has taken the helm. You know, he authored a great turnaround at Papa John's, and it seems like he's got a great plan for Shake Shack, right? It's primarily going to center around improving the marketing program and increasing ad spend. You know, Shake Shack has not done a lot on that end, and you know, he has a great marketing background, so we think he's the right guy for the job. And he's also talking a lot about running better restaurants, improving speed of service, right? Improving throughput. You know, and this isn't rocket science. You know, it's a difficult business to execute in, but it's not hard to figure out. Better food, better service, better marketing.
Microsoft keeps going. It's the rocket ship that keeps on giving.
Turn for Shake Shack.
When you take a look at what was going on at Shake Shack and when you take a look at what was going on at Wendy's, what does it all tell you, Michael, about what it means to sell a burger in this market?
Yeah, so I would say, you know, from a 5,000-foot view, you know, this is really supports what we've been saying for a while, and it's that, you know, the K-shaped recovery is impacting restaurant sales, right? And restaurants like Wendy's that cater to a higher percentage of low-income consumers, you know, historically in quick service, about 30% of the customers are low-income consumers, right? And those consumers are struggling due to inflation, right? Due to higher restaurant prices and prices, frankly, everywhere, right? And so Wendy's has pretty large exposure to those customers, and, you know, they're struggling to drive positive same-store sales, whereas, you know, Shake Shack caters to higher income consumers, and they're seeing less pressure to discount. They're able to continue to pass through larger price increases, right? And that's helping their same-store sales outperform right now.
Well, Michael, to that point, we did hear from the Wendy's CFO saying that higher income consumers are visiting more often. Maybe we aren't exactly seeing that yet in the earnings, but I think that says a lot about just the state of dining out right now in the U.S.
Yeah, from what we're hearing, everybody's trading down, right? From fine dining to, you know, lower cost full service, from full service down into fast casual down into QSR, right? It's kind of a cascade effect, right? And so, you know, if you're a Wendy's, you know, your low income consumers actually drop out of restaurant visits completely to some degree and shop more at the grocery store. You know, they are attracting some higher income consumers that are saying, you know, maybe I'll eat out at a full service restaurant one or two fewer times a week, right? And save some money and go to a Wendy's, right? It's such a smaller portion of their customer base that it's not going to offset the traffic loss from the low-income consumers. On the bright side, they do spend more, and they do tend to buy higher margin products.
Michael Halen of Bloomberg Intelligence, we thank you so very much for keeping an eye all over the market for us. Now, coming up next, we're going to talk about Bill Ackman's IPO dreams cut short as he pulls the plug on the closed-end fund IPO. We're going to discuss it in today's Wall Street Beat. Stick with us. This is Bloomberg.
Pop in over here.
Cap on the line. In-depth expert analysis. John Fort, Morgan Brennan. Closing bell overtime. Today, 4 Eastern.
No, also an ad. Okay, interesting. Here we go. He's going to talk Carvana.
Profit and a terrific guide. Carvana founder and CEO Ernie Garcia, usually on Mad Money many times, joins us first on CNBC Now. And I know that I have to join Adam Jonas in almost saying congratulations, Ernie. He had to hold back because it was such a great quarter. Thank you for coming on the show.
Thanks for having us. Really appreciate it.
All right, so let's go to this line that is so antithetical to the industry that you're in, that it almost makes you feel like you're not in the same industry. It is very rare to be both the growing and most profitable company in a category. Then I think people should understand that there's only been one way to make money in this business, where you sell so many cars and you try to do it with ribbon gross margins. You're not doing that at all, are you?
Yeah, so Jim, we started this company 11 years ago, and we decided to build something different, and that meant a completely different supply chain. It meant a ton of investment. Over the last 11 years, we've invested about $10 billion in trying to build a completely different supply chain, and all that fixed cost investment is now coming back and paying off, and it's showing up in much lower variable costs. And so it means that we can give customers a great experience, we can grow really quickly and efficiently, and then we can also hit these really exciting milestones, like having the best or the most profitable quarter of any automotive retailer ever. So we're extremely excited about all that.
Sold over 100,000 cars.
Yeah, they killed it. I don't know how they increased their margin with more sales. Honestly, they killed it.
We're 2 right now, but our sights are set much higher, so we'll keep going.
Okay, so you have an offering that's being done, and it wasn't really clear to me. I know it's some of your stock, but I thought that what was most interesting, maybe you can give us the number, is that you list as one of the risk factors short sellers making up stuff about you. Is that still a problem?
You've been through our risk factors in more detail than I have, it sounds like. So I think, there are stories out there. There's always going to be stories. That is what it is. We don't focus too much on that. I think we always just try to keep our heads down and keep moving forward. I think, there's that old famous saying, in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. So,
all right, Buffett quotes now. Okay, here we go.
Hertz has an interesting story today. They're accelerating them selling of all the inventory they have, which are, yes, Teslas in large part. Are you a buyer of used Teslas, and are they selling well?
Sure. So, let me answer that question a little more broadly. I think, we sell kind of the cars that Americans love. We look at what customers are buying. We buy those from customers and at auction, and then we recondition them. We get them ready for sale. We sell them to our customers. So that means, we're selling Equinoxes. We're selling Jeep Grand Cherokees. We're selling all the cars that you just expect, Escapes. But it also means, we attract a customer that's a little bit younger, a little more affluent. So we do disproportionately sell EVs. We have a higher market share in EVs than we do in ICE. And so our top selling car is Tesla Model 3. So we do sell a lot of those as well.
Wow,
but in general,
that's really interesting.
Buying a car is easy and fun for our customers, and we're giving them what they want.
There was a moment on the conference call near the end where someone said, look, you say that you love your customers. Are you going to cut them in for more of the profits now that you're making money? And I think people should listen to your answer, because actually I still think that you're true to the customer more than you are to anybody else.
Yeah, I think something that's always true of every company when you start is you have to build something that's better for customers, or you have no chance. I think it'd be really easy for companies as they age and mature to focus on margins or this financial number, that financial number. But at the end of the day, all that really matters is that your customers want your product more than anyone else or anyone else's product. And so I think we're really focused on continuing to make gains. We've made enormous gains in the last year. We improved our unit economics by about $2,000 while holding our customer offering flat. That's pretty incredible. And I think if we can continue to do that, it means that we're going to have a lot of gains to give back to customers to further separate our offering. And I think that's the dream. We want to build a great company. We want our customers to love what they get.
Ernie, looking at a chart of the stock, we all remember before the turnaround took place, shares got very, very inexpensive, a lot of doubts, a lot of headlines about near-death experiences. Was there anything about that time that fundamentally changed the way you think about running the business?
I'm gonna tell a brief story if it's okay. I think we started this company in 2013 and we launched out of Phoenix, Arizona. We were capital intensive. We had a finance arm. That didn't fit the venture capital pattern. We really struggled to raise venture capital. As a result, we went public after just 4 years. That's very early in a company's life to go public. For the first part of that, I don't think we were that well received. We were one of the worst IPOs of 2017. We came out at $15. We were down to $8 a couple weeks in. By 21, people thought we were onto something. And so that was a nice brief moment. And then, car prices went up, rates went up. We made a big bet on our future and financed it with debt. Investor perspectives changed quite a bit in 22, and our stock went down 99%. And that's not part of the dream. That's not something you foresee. That's not something you imagine. And in those moments, unfortunately, I think a reality is people will line up to kick you when you're down. And so, you wake up every morning and you read the articles and you see the news. Who didn't line up? People do unfortunately line up. If you want to make a friend for life, go extend your hand when someone's having a tough time, and it will really help. But I think the people inside Carvana, they responded incredibly well, and for that I will be forever grateful, because in those moments I think the biggest risk is that people decide to give up. And the people in Carvana came together. We did our best work. One of our values has always been we're in this together. But that's an easy thing to write on a wall. It's a hard thing to make true. And in moments like that, you get tested. And the people of Carvana have done an incredible job. And so to all of you, thank you so much. You did this.
Okay, so Ernie, people have to know, I bought a car. I bought a car from you guys for somebody, and they didn't like the car, and I returned it. The stock was at $3. I said, "This is a win. Gotta love the stock." But you also had help, didn't you? You had some people from a big private equity company came in to help you.
So, I think early on, we had some great investors. Along the way, we had a lot of investors that stuck with us and believed in us. We've certainly had interactions with different debt holders and everything that have been very supportive. So I think, these things never happen.
Yeah, they burned their bondholders when they were at bottom about to go BK. But then again, it all paid off, right? The company skyrocketed from there.
But, we've been lucky to catch a couple breaks, and I think we've been very lucky to accumulate a team that's been very resilient and been able to fight. And so,
totally reasonable answers, by the way. So fair.
I think we have a lot left to do.
All right, keep that humility, Ernie, because I know when you were down, you came on air, and you didn't duck us. You came right on air, and you did the right thing. I want to thank. I've got to tell you, if you saw, I don't know if you guys ever bought one of these cars? Ernie Garcia, he's the CEO of Carvana, and I'm just laughing because the person I bought the car for said, "I don't really like that." In the old days, you had to eat it. So I said, "Hey, come pick up this car. I don't want this car." And they came up, and I didn't know any money. It's pretty amazing.
All right, thanks to Ernie. Jim, you're going to stick around for Renee Haas.
Hey, I got time on my hands.
Of ARM, 10-year 4.008. Don't go anywhere.
Yeah, it's about to break to 399. It's crazy. And you'd think small caps would be running on this, but they're not. Small caps are getting crushed today. And AMD's down. The small caps are down. It's a little bizarre, honestly. These are not things you would anticipate. So, again, I think this is a quite a bizarre market. Microsoft's looks like it's really starting to cap out over here. I mean, 428.98 is the line that I have for it. I think it looks like you're sort of pre-rejecting there a little bit. The Qs tried to keep running. Also looks like they're somewhat tapping out. Yeah. Still some moves here on IWM. MSFT, Qs. Tesla's not really going anywhere right now. Bitcoin's trending nowhere. Nvidia's not really going anywhere. ARM's. What's ARM? 969 here. Etsy. Yeah, FAM's nothing's changed, dude. That's crazy. Let's see here. So, crazy. Just a crazy environment. All right, well, Q's topped off a little. AMD, which is incredible, just sort of keeps bleeding down here. But a lot, like the stuff that, Carvana's rallying. Excuse me. Goodness gracious. Carvana's rallying, but this is a very, 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 very bizarre market. There goes IWM. I don't love this to be bullish, I will say. It feels very bearish. Slower, one sec here. Okay. Yeah. It's just crazy. Okay. So, let's see here. End phase? No. It's a lot of this. Look at this. ARM tried to recover there. And then gave up. There's no rally here. This is all fugazi. This is crazy. And I usually have an opinion. But I don't know what the hell is going on. This is odd. It's like my thesis was go bearish into this week unless earnings are good, and then Powell's gonna pump that up. But it turns out, even with good earnings, and more of a Powell pump than we expected, you still have a poopsie doopsie situation here. Let me see what that data came in at. So prices paid came in hotter than expected, 52.9 versus 51.8. Still expansionary, but barely. So it's probably not a big deal. Manufacturing came in weaker than expected. Construction spending month over month came in negative. New orders come in at 47.4. Wow, big miss on employment. 43.4. That's a big miss on employment there. Let's listen to Rick. He's going to freak.
If you look at that number, it's the lightest since May of last year. And finally, employment on a very important week where we had a light employment level on Wednesday from ADP. And of course, we have the big jobs report for July tomorrow. 43.4. That's the weakest level going all the way back to June of 2020. We'll call it 4 years. Carl, back to you.
So Tesla jumped on that. Probably that. I mean, the only thing I could guess is the ISM employment figure showing weakness, somewhat trying to create some bullishness for cuts, because it looks like a lot of things popped at the very minute that came out. I don't know that any of this is sustainable. I'm highly confused. So we'll have a conversation about this in the course member live stream in detail, as we do every day. I always think that's the biggest thing, the biggest benefit of the courses on building your wealth is just the conversations that we get to have, and the research that we do, whether it's on earnings calls or the market broadly or whatever. I always find those to be very valuable. But I will say this is very odd. And it's actually kind of bad, right? I mean, if the market is going to sell off on JPOW saying let's cut, and on strong earnings, and on strong data, and everything's going to dump, then I start getting even more nervous than I was last week. What the hell? I don't know. I don't know the answers. That's faux show. Huh. Oh, well. Let's listen in here.
Joins us now to break down the numbers. Renee, it's always a pleasure to see you. But I also want people to understand you were cautious on some part, but let's go over what's great first. And that is what you're doing with the tech titans and how you are now the most ubiquitous processor in history. I want you to have the floor on that before we go into the difficult guidance.
Well, thank you, Jim. It's great to be here. Thanks again for having me. You stated it very well. ARM is the most ubiquitous microprocessor compute platform in history. We are in every digital device you can get your hands on. Again, we estimate 70% of the world's population touches ARM in some way. That's in the data center, that's in the cars, that's in PCs, that's in mobile phones. Literally every digital device runs on ARM in some way. And the reason that's so important in terms of thinking about our company going forward is that the platform, in terms of going forward relative to growth, et cetera, you can't build a digital device without ARM. So whether you're thinking about growth in the data center with AI or even security cameras, it's going to run on ARM. So we're very, very bullish about our long-term prospects.
Now, I think people should understand that one of the reasons why that is the case, a lot of people don't understand what makes a winner here. So many people write software for you, and that's what dominant, correct?
It is the software, thank you.
Do I think the leader of Hamas being executed in a... Yeah. Yes. Yeah, it is. It's a contributor. But look, everything is selling off. This is so bizarre to me. It's not what should be happening. And so that makes me very, very confused. Very much so. 10-year yield just dropped below 4%. Excuse me. I'm dying over here. I'm actually starting to get better. It's just very annoying. So I don't know. I mean, that's geopolitical instability is a real issue. Let's be clear about that. There's no doubt there. But I don't know. All right, let's give Jimbo a listen here with ARM.
The important thing when you look at ARM, Jim, is you have to understand our business and how you break it down. We have two components to our business. We have a licensing business, which is really about R&D, and that is investment in new technology, new products. Our licensing was up 72% year on year, and we're seeing huge growth in demand because, candidly, to design these advanced products, people need more and more compute capabilities. You know, for example, the chips today that are running some of these AI workloads like Llama, when those chips were designed, Llama was not even invented. So what we're seeing is people needing to invest more and more in new chips. So that drives licensing, which is about 40% of our revenue. We saw great growth. The other component is royalties, and it's well documented that some markets are slowing, have not completely recovered, but we're seeing great growth in some other markets. Our cloud business was up 75%, double digits up in automotive. And one of the areas we're most proud about is our smartphone growth, where units have been relatively flattish, but we were up 50% year on year on royalties in smartphones, and that's because our new version 9 commands greater royalties. So for us, you really need to look in the long game in terms of the mix, but licensing is really the canary in the coal mine, if you will, about investment in new R&D. If that's going up, that's great for ARM. And royalties, because we're everywhere, not every market is up and to the right. So yes, true, there are a few markets that have not completely recovered.
And can you give us some more color on your licensing pipeline, especially as you say you're bullish about the long-term prospects? How long does that take to really filter into royalties?
Yeah, it's a great question. Thank you for asking that. It generally takes about a couple years from the time we license technology to the time it shows up in royalties. And that's really a function of the time the IP is licensed by the customer, they put it in a chip, that chip goes into an end product, let's say a smartphone, and then goes into production. It's about 2 years for smartphones, probably the same for PCs, a bit longer for data center and automotive. But it's a great leading indicator of where our business is going. So if you see licensing consistently up, And licensing has been, frankly, fantastic for the 4 quarters since we've been public. That's a great leading indicator of more ARM in the future.
You know, Renee, we talked about earlier the previous hour that the worst performing stock in the Dow is Intel. Now, I would have expected that Intel would have gotten a lot of the CPU business in the data center, but it seems like that this may be almost a game set match, zero sum, where you took it all.
Well, the data center market, Jim, is a really interesting market because you have the traditional data center market, general purpose compute, if you will. And ARM had a lot of momentum in that market in the last couple of years. We picked up Amazon, we picked up Microsoft, Google announced the chip. So we've seen great growth in general purpose compute. And that's really because of the power efficiency of ARM versus x86 and other architectures. But I think the real growth driver for us is also going to be
I'm
these
gonna
AI data.
back off this yapping here for a moment. This sales pitch on ARM. The more and more I just sort of look around and try to study, resources, the more confused I am. So I have to say I feel somewhat flat-footed with what's going on right now in the market, and I generally don't feel that way. Because again, like we wrote here, we can now add to this and say, reiterated by ISM today, right? So labor costs are not an issue. Unemployment claims low. Earnings were really good. The geopolitical, maybe. Election uncertainty, and then geopolitical risk. Like Iran threatening to respond. Could be that. Don't we typically see the market doing the opposite of what should be? Well, sometimes. Yeah. But that's the tough thing, is which time? Right? So, Hezbollah leader says group will definitely respond to Israel's killing of top commander. Yeah. I don't know that that's enough to weigh this market down. What I'm seeing is excuse me. I'm seeing AMD drop basically to levels where it was after excellent earnings. You have the Qs that are really giving up some steam here. Trying to recover right now. You've got IWM. Looks like it's trying to start trending up. You've got Microsoft that's consolidated around this level now for 30 minutes. Tesla's not really going anywhere. I mean, Bitcoin continues to be sort of this leading canary in the coal mine, right? Where you peaked out at the Bitcoin conference and then it went down and it was sort of this warning like, don't buy calls. Damn it. So, I don't know. So yeah, maybe just wait until tomorrow, right? Because you have a lot of catalysts. Apple, Amazon, and then jobs tomorrow. But the market seems to be punishing everything. I think there's a lot of nervousness. And the nervousness didn't go away this week. That's what it is. There's a lot of nervousness, and that nervousness did not wane this week. Yeah. I don't know. It's going to be my take, and I think I'm sticking to it. So, I don't know. Maybe that's crazy. Maybe I shouldn't do that. What's SQQQ right now? 850? So, let's see here. Yeah. All right. So, yeah, look at it. IWM even gives up too. Keeps going. This is crazy. Just crazy. Oh, wow. Yeah, look, Tesla now taking a leg down. I don't know. Yep, everybody's waiting for the next caddies. Yields are telling us the market is very nervous. I will take a peek at those. Let's see exactly what's going on with yields here. Yeah, I agree with the nervousness, but I want to see here. So, wow, 10 years down, 12, what's it called? 12 basis points. What's the 2-year? Let's see the inversion. 2-year is down 13 basis points. You're still about 21 basis points inverted. Oh, well. All right. Take a brief listen over here, and then we'll hop over to the Course Member Live.
I'm going to play?
Yeah,
I'll be here.
Yeah.
Yes, you will too.
Oh, they're going on commercial. All right. Very well. Then in that case, we will push the button. Yeah, thanks for being here. We're going to increase those prices on the courses shortly. I think some of them have already been. I think stocks and psych is still not moved up yet. I think there's some people are emailing still. But anyway, check that out if you still want. But otherwise, we'll clear out these emails and we'll be on. So thank you so much, and we'll see you in the next one. Let's push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There you have it. Goodbye, everyone. We'll see you in the next one. Love y'all. Bye.